This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, now let's take a look at the gold market. On the gold market, there are no much changes since market, as you can see, stands in the tight range within the whole week. In fact, it's calling around the intraday confluence support that stands on the 4-hour time frame. But in general, in overall price action on the daily time frame, look, if you will take a close look at it, well, it looks a bit bearish. Because here it's very difficult to speak even about any ABCD pattern, because you can see the development is a bit ugly from the, if you will start to take a look at this section as the ABCD pattern. And if we compare the moment when the trend has turned bullish, it was right here, and overall price action that has followed after that, we see that in fact price action hasn't quite supported this trend shifting. So first of all, in the beginning of the trend shifting, the market has shown no reaction at all. The price action continuing move to the downside. Later we see this choppy and sloppy price action to the upside that absolutely doesn't correspond with a solid bear trend. Solid bullish trend. So it's gradual move with this long tails and significant retracement on the intraday charts. So that is not the impulse move. Since trend has turned bullish, we in normal situation we could count on some impulse acceleration, but that was just some, could call it some sort of the flat action, although we finally have got this leg to the upside. In general, if we will treat this price action at all as some kind of the consolidation, as you can see I have marked it by this consolidation, then we probably could speak even about some sort of the bullish or bearish dynamic pressure. That's the first moment. From that perspective, the appearance of this butterfly pattern looks not absolutely impossible. And that's why in the current environment, that is the first reason why I think that the short position here is safer, and it is more logical rather than bullish position. From the another point of view, from the pure technical point of view, the taking the long position is also a bit significant riddle, because if you will read our analysis of the gold market, you will see that on the weekly time frame, with this price action we have got there bearish engulfing pattern, and using this pattern for understanding where we could start to think about bullish or bearish trend, we could understand that speaking about the bullish situation is possible only if market will taken out of these highs, the highs of the bearish engulfing pattern. But if it will do this, it will be very close to the confluence resistance, the target of the harmonic swing and the lever bottom. And from that perspective, that is too small distance to take in the position, because your stop will be somewhere below these lows. You can see that the market doesn't give us any possibility to take the long position on the daily time frame. If of course we will not get any signs that this move will be more extended to the upside, but now it's not much sense to speak about it, because anything could happen. But currently we do not have this setup. So from that standpoint, and taking into consideration overall this price action that looks not very encouraging from the bullish perspective, I think that market has some sort of the growing bearish pressure that is forming inside of the price action somewhere. From that point of view, let's discuss what we could do on the gold market in the nearest future, and let's understand the crucial levels here. On the 4-hour time frame, what we see? In fact, we just could repeat the same analysis that we have made on Thursday, because Friday was the holiday. But today we have some more details. We have new pivot point as for the week, as for the month. So as you can see, this move has stopped right after the ABCD move to the upside. If that was just a respect of this move and market really has intended to continue move to the upside, it already would have to do this, because what we see, move up, completement of the ABCD pattern, retracement, reasonable retracement to the confidence support, that's absolutely logical, jump up. So that is enough for continuing move to the upside if market really intends to do that. But this hasn't happened. Instead of it, market has turned to the ping pong between some resistance and some jumps out from the confidence support and tested it. So we see first test, bounce up, second test, bounce up. So market can't reestablish the bullish position. That is also tells us that here is something is wrong with the bullish power. Something is wrong with the bullish sentiment. So that is just a reaction of the support here on the market, but it has not significant power to make market move higher. And that in general looks bearish. When the market tests some significant area of support, with each test this area becomes weaker. And that already market has tested twice, and almost the third this area of support. Almost 3 times has been tested this area of support. But here we see that here we got new pivot point. That is the monthly pivot point that hasn't been tested yet, and that will end the support. Also take a look, slightly lower stands the new weekly pivot support one. But also we have the weekly pivot point and weekly pivot resistance one. From that perspective, I think that if you would like to enter short, you could be focused just on this swing to the downside, because as you can see, market can't exceed this, and probably we could take the short position against the weekly pivot resistance one, because if market will continue move up, it will simultaneously move above the weekly pivot point. That will tell us that sentiment has turned to the bullish, and if market will exceed the weekly pivot resistance one, it will simultaneously say us that probably sentiment of bulls is strong and market will continue move higher, because moving above the weekly pivot resistance one tells that this is not just the retracement. That could be probably turned to some short-term trend that will lead market high. That's why I suppose that this swing will be significant for trading on the short side of the market. While speaking about taking the long position, well, it's very difficult, because although you see that this support is nice and market currently stands rather close to it, theoretically, if you would like to take the long position, it's better to do this somewhere in this area, because at least this will allow you to place the relatively tight stop and minimize your risk if even market will continue move to the downside. But speaking in general about the technical picture on the market, it's difficult to justify the entry on the long side of the market. So if you will take a look in the hourly time frame, here you see the levels that we could deal with. Particularly I like this area, so 1601, the 618 resistance, most recent swing, that stands very close to the weekly pivot point. So if market will start move to the downside, I prefer that it do this from this area, because in this case it will hold below the weekly pivot point. That gives me the confidence that peers are still control the market, and that will be logical to see the pullback right from the 1601 area. That's very typical for the gold market, making 618 retracements, continue move to the downside. Stop could be placed somewhere above this area. Well, theoretically it could be maybe enough just placing the stop above this swing high, but for more safety it could be done right here above the weekly pivot resistance one. So that's just the discussion and trading plan based on the levels and some treatment and understanding on the overall price action on the gold market. But the problem is that we in fact have no clear patterns that we could stick with. That makes the analysis and taking any position a bit difficult. Maybe we will see something in the beginning of the week, something more, market will give us more clarity. But in general, personally, I think that overall price action looks a bit heavy, and I see here more bearish power rather than bullish intentions of the market and pretending on the continuing to the upside. I think that the Cyprus panic a bit come down and market find some equilibrium, and even with the panic on the market, the demand for the gold was moderate and wasn't able to move market higher and wasn't able to reach the 1630 area. Since some clarification has come from the Euro Union, I think that gold market could reestablish the short-term bear trend that it has started from the beginning of the year.